Hello, everybody. Brian Ladd here. I'm really excited to go over our housing update as we enter, well, we're not enter, over halfway through Q4 here in 2026. I'm joined by Ronald, who's hiding in the back. I'm making sure this is all working technically. Thank you. And Steve Lacrosse. Steve, say hello and we'll get going.
Hello, everyone. Thanks for joining us today. It's always fun to take a minute and go through what we're seeing in the headlines, what we're hearing from our clients, and see how the two match.
Okay, our first question came in. So everyone that has questions today, please put it in the chat and we're going to have a really robust discussion. I'm going to put a pin in answering that one because I think we've got some good market data to talk about that. And Steve, let's bring up the question on the timing for spring listings when we're talking about inventory. Sound good?
Yep, sounds great.
Okay, perfect. I'm going to go ahead and get this going. So we also have Ronald has a list of polls today. And as we go through the webinar today, we're going to be asking you a series of questions. And then once he gets a smattering of answers, he's going to go ahead and publish those. This will make sure that we keep the content tailored to you, and we can address any concerns that you might have. So what I'd like to do is start today acknowledging the fact that the headlines are perhaps a bit confusing, and that we, a lot of our buyers and sellers are concerned about the politics of the day, the headlines of the day, and that R word, that recession word that is increasingly being thrown around. Um, and we want to acknowledge that. But as we've done in our past webinars, we can often decorrelate that, decouple that because there's a lot of anecdotal and secondary pieces of information in the economy that people always try to link to housing and say housing is going to boom or housing is going to crash. But historically, housing is a supply and demand driven part of the economy, and that it primarily has to do with the affordability of the mortgage rates, the demand that is being placed on the supply that is out there. And often housing performs well and is flat or has a positive appreciation during recessions more often than corrections. And so we need to acknowledge some of those things, but I think the factors, we're going to get a little bit deeper into the factors that more directly affect what's happening in housing. And perhaps one of the biggest things that we've seen in the last number of years, since 2023, that has really affected housing is home turnover. And so, Steve, would you mind taking this? I want to just change the formatting of how we're sharing this so they can see it.
Yeah, absolutely. So if you look at this chart, you can see over the last little over a decade, we're at the lowest number of homes turning over nationwide. You can see where we peaked 2021, interest rates were super low, sellers were able to get a lot for their homes, and there was the emotion of let's go find something that we really want. But since then, we've seen three pretty consistent years of low turnover of homes. And that is a direct result of what we're seeing, whether it be in the economy or if we flip to the next slide, we can see what the reason is. A lot of the headlines over the last number of years have spoken to this. Why are we seeing so many or so few homes turning over? And it's really three things. It's affordability challenges have kept buyers on the sidelines. Housing prices have remained very firm. There have been some seasonal fluctuations, but overall they've been firm. And mortgage costs have remained high. Sellers that are in homes, there's I think 70% of the mortgages that people have are under 5%. And so when you have people staring at selling their house where they've got a 3 or 4% mortgage to get into a house at a 6, 7, 8% mortgage, like we saw a few years ago, it keeps people rate locked. And then finally, the economic uncertainty has just caused buyers to be cautious. They've caused them to be skittish. I'd say that's probably the biggest thing that we see in the market is people are afraid to make a mistake. Buyers are afraid to overextend or overpay. Sellers are afraid to leave money on the table. And so you end up with this You know, the stalemate, I guess, for lack of a better word, is, and it's just over concerns. It's seeing the news about inflation, seeing the news about jobless claims, and I can't blame anyone. If you when you see that constantly, of course it's gonna affect you.
Yeah, I mean, if you just here, I want to go back to the slide a little bit. When the how little inventory we've had turning over in the market has been really unprecedented on how few people want to sell. But there's a lot of reasons why we're kind of breaking through that right now. And most of the signs that we're seeing are pointing us in the direction of increased transactions and increase sales, increase transactions, rather than, the pessimism of, oh, we have a recession coming or it's an unstable political time. And a lot of this has to do with, what Steve was talking about is mortgage rates are coming down, and not just for the buyers. This is affecting sellers. There was a lot of sellers that had 2.75, 3% mortgage rates, and they certainly didn't want to sell their house with a 3% mortgage rate and go replace it with an 8% mortgage. A 5% increase in your mortgage rate, even if you bought a house half the cost, it was about the same mortgage payment or higher. But as that delta diminishes, and we have a good percentage of the population that are at 6% mortgages and 5% mortgages, and as we currently stand, in the mid sixes to low sixes, it's not as painful for sellers to sell those houses. So what we're going to increasingly see is, as these mortgage rates drift down, or even just having drifted to the point where they are, we're seeing more sellers willing to bring their houses to the market. And it's leading to more inventory to choose from, for the buyers. Steve, do you want to kind of talk about where we stand with interest rates right now, and where we've been?
Yeah, absolutely. So this is just a snapshot of the year, and you can see we've come down from about 7 to just sitting just over in the high sixes, 6 1/8, 6 1/4 is where we sit today. There's been plenty of talk of Fed rate cuts. We've seen a few of those this year. Remains to be seen what happens in the future. But this type of movement is the movement that people have been waiting for. And if you look back, I mean, if we were to go back just a little bit further, Brian, we'd see that just a year and a half earlier, we were up well over 7%, and closer to 8 at one point. And so, this stat affects the vast majority in Bend locally. We see about 70% of the transactions that are taking place, purchases that are taking place with loans in place. So, when you factor that in, this is affecting, 2/3, 3/4 of the buyers.
Yeah, and the poll that we just had for everyone that came up the first time, what's your biggest hesitation in housing market? The number one is economic uncertainty, which we've talked about a little bit, but the other one is concern about selling before buying, and this lies at the very crux of where we stand today. But things seem to be moving in the right direction, both for sellers and buyers. And so, what I'd like to do here, let me go to this next slide, because surprisingly enough, and I know this is hard for people to stomach with the housing prices that we have, but have had the best affordability that we've had in the last 2.5, and gosh, probably 3 years, because of the easing rates. And this says pullback in prices because nationwide there has been a couple percentage pullback in prices. In Bend, it's more really stability in prices. But on a nationwide, this is a nationwide data showing that, the median monthly mortgage payment since this is May of 2025, has gone down from about 2,900 down to about 2,500. So a decrease of about $300 a month in the last 5 months. And that's for a medium price house nationwide. And what are we at medium price nationwide? About 400, 425,
Exactly.
something like that, Steve?
Yep, exactly. Yeah.
Yeah, so if we're talking double prices here in Bend, we're talking probably a five, six, $700 decrease in mortgage payments for the same house in the last 5 months. And if we go back and look 2, 3 years ago and draw that rate up to 7.5, 8%, we're talking, but being able to buy the same house that you could have bought a year or two ago for $1,500 less per month mortgage payment. And so it's as hard as it is to believe, given where we've been, buying affordability has been getting progressively better day by day, month by month for about the last 18 months or so in Bend, despite the fact that prices have not gone down. And we're just setting up another poll right now on how you feel about housing prices. And we'll get to that in a second. But Steve, why don't you address, while everyone's filling out this next poll, why don't you address where we stand with wages?
Yeah. So, really, we hear affordability a lot. And when you really break down what is affordability, it's the combination of three things: home prices, how much people are making, and how much it costs you to borrow money to buy that house. It's those three things. And so when people are talking about affordability, affordability could be going up even though prices are going up because it's cheap to borrow money and people are making more money, right? And so one of the things we talked about in our state of the market a few years ago was exactly this. What was the intersection and how were things compared between home prices, mortgage rates, and that third factor of wages? And I know we just pulled the chart down, but wages have been going up, mortgage rates have been coming down, and prices have remained, like you said, Brian, overall flat. And so two of the three factors are heading in the direction of making it a little easier. Let's just be clear. This is not saying that Bend is a super affordable place for everyone. There are definitely challenges nationwide as well as locally, but what we are saying is that it's headed in the right direction.
Yeah, and let's address this next poll. I think we just shared that, right? How do you feel about Bend home prices and where are they going? About a third of you saying going up, third of you are saying stay flat. So that's saying two-thirds of you think the prices are going to be at or above where they are right now. A few of you saying they're going ideas, and then other people are saying, I don't have any idea. You're supposed to tell me. So fair. And
Right.
and and so um, anecdotally, that's about what the experts are saying as well. So whether we want to use the experts as experts or just another voice, that's about what they're saying as well. Nationwide, experts are predicting that prices are going to be flat to modest appreciation in the coming year, despite the headwinds and the uncertainty that we're at. So I'm going to go ahead and share this, and let's get to the next slide. So I addressed this before, but I think it worth bringing up again. There's been a lot of sellers that have been reluctant to sell. They're not sure where prices are going. They didn't want to give up a low mortgage rate. But as we know, Steve, life doesn't stand still, right? Our kids go off to college. There's all different types of life changes that have happened in the last 2, 3, 4 years, and people have been sitting on the sidelines with that low turnover that we opened with, but life moves on, and now the interest rates are to the point where they're at, and we're starting to see a lot more turnover. And those sellers, when they sell, they're also buyers. Their inventory increases. Buyers have more selection. So we're seeing a lot of implied liquidity coming to, liquidity and turnover to the housing markets. And so even if mortgage rates weren't to go down any further, we've already decreased that delta enough that we're seeing a lot of action. And we're also seeing a lot of implied action coming in the spring. Steve, what are you hearing from your buyers and sellers right now about the coming, what they're going to do with housing in Q1 and Q2 of 2026?
Yeah, so that's the big thing, and you alluded to it before with the housing market being very much supply and demand driven. The big question is how this webinar started from one of our guests is when is the best time to either buy or sell? And in a lot of cases, that seller is a buyer. And so they're doing both. But what we're hearing a lot of sellers talking about waiting till the spring market, and we can do a whole nother piece about what that means in terms of when a spring market actually is ideally timed. But we do expect that there will be added inventory coming on this next year. Part of it is what you said, Brian. Part of it is people can only put their lives on hold for so long. Part of it is in, getting out of that rate lock environment. But you can see that our inventory has crept back up to getting close to levels that we were very comfortable with prior to the pandemic. It was not a straight shot back up, but it's a slow and steady increase each year, and we would expect that would continue this coming year. And we would also expect that that would be met with buyers who are doing the same thing. They've been watching, they've seen for a couple years, not a lot of new homes coming on. Inventory has remained low, prices have remained stubbornly high. And so it's that lack of inventory it's not making it compelling enough for them to want to get off the sidelines and make that move. As they have more choices, as we have a little more time to make those decisions, as the days on market has gone up a little bit, those are the factors that get buyers back in the market and get them thinking about finally making that move for whatever that fundamental reason was that they originally started looking at it.
Yeah, and let's talk about that. So inventory. A lot of people see in the headlines that inventory's up 30% year over year. And it's natural to extrapolate saying, hey, there's 30% more homes available for sale. Our price is going to crash. Are there too many homes for sale? Are, and it's a very natural thought trajectory, but we need to put it into context. Nationwide, between 2016 and 2025, which was we put up on the screen here, it shows that we're still below the inventory levels that we had in 2016, 17, 18, 19. It's just that we went through a 4-year period where we had the lowest amount of homes that were for sale that we've had in absolute decades. And this is our local inventory here in Bend. So this shows that on a month-by-month basis, we have about 750 homes for sale right now. On a month-by-month, we're up about 8% year over year. Monthly or quarterly and weekly data is a little bit different. But what this shows is the ebb and flow of inventory. And this is also going to segue to the questions that we've had that have popped up in the chat so far about market timing. But Steve, do you want to kind of talk about where we stand in inventory right now compared to the last few years, and then put it into context of, when is an appropriate time to bring your home to market?
Yeah, you bet. So what I like in this chart is it hammers home the point that this has been a stable settling back into the norm seasonally. You can see from that chart, seasonally, we have fluctuations of inventory. Inventory grows in the first half of the year, peaks out, tapers off through the end of the year, and does the same thing. And we've seen this year, even in the midst of the pandemic, it got a little wonky. But what we've seen is a nice steady recovery back to levels that were very common in the late teens prior to the pandemic. And so what this means when you're a seller and you're trying to determine when is the best time for me to sell, of course, the first things we would do would ask questions. Tell us how impactful it is to be listing your house in the holiday season. And if you were to wait 6 months, what does that look like? But let's just assume you have total flexibility. The questions you need to be asking are, do I want to be on the market now when inventory is lower, when I'm not competing against as many homes? Sure, there might not be as many buyers in the market, but do you know who's shopping in the cold and in the snow? Those are buyers who need to move. And so there is this positioning game of, do you want to position yourself as one of the few choices right now when inventory is generally at its lowest? Or do you want to position yourself against a little more competition in the spring when there are typically more buyers in the market? And so it really is a nuanced individual question of trying to anticipate, what will that inventory look like? When will it come on? How does that impact your lifestyle? How does that impact your daily needs and activities in terms of what we said about, do you need one story instead of 2 stories, and some of those factors? But we would expect that inventory number, we would be approaching the low of the year in the next month or month and a half, with an inventory starting to tick back up. And so with regard to perfect timing, no one ever likes to hear that, our crystal ball doesn't work quite like that, but we can certainly tell you that there are some strategies around trying to stay in front of that trend, making sure that your home is presented in a way that allows it to stand apart from the competition, marketed well, priced well, really pinpoint the house, the market, and the surroundings, the other inventory, the competition that we have, and make sure that you elevate your home. I just saw a poll pop up. You're muted, Brian.
Sorry, I was muted. My dogs were barking. Sellers, what are your biggest questions regarding selling? The leading things in here were, how long will it take my home to sell? Should we wait till spring, and will prices stay stable? So and should I sell, rent, or hold? So these are a lot of questions. The cheap answer out, the easy way out for me to answer these is it depends. It depends on your plans, et cetera. I do think that a lot of sellers and buyers wait for all the market signs to line up to say, I should buy a house or I should sell a house on this date. Now, the problem with that type of behavior is that it's a little bit of herd mentality in the sense that if everything's lined up to buy a house, prices are right, mortgage rate is right, season is right, most likely it's going to be right for a lot of people. And so what we've often seen is that when interest rates go below a threshold from 6 to 5.99 and it's in the news or whatnot, when buyers re-enter the market, they all re-enter at the same time, and there's a lot of pressure on the inventory that's sorry, my dogs are loving the UPS guy. They're all trying to buy the same inventory at the same time, which makes less homes available, and they're often choosing between the second, third, and fourth home as opposed to the one they wanted that they could have bought when maybe interest rates weren't quite perfect, things like that. So the answer is it depends on you and a long-term what's your long-term plan? There's always a point to enter and exit the market. Market conditions might be a little bit different, but I challenge people to question and think back to the last time they bought a home, or God forbid, 2 homes ago, and say, what were the interest rates when I bought, and what were the interest rates 3 months before I bought and 3 months after I bought? And what season did I buy in, and what was the inventory a month or two on either side of that? And I think that will diminish as compared to the importance of having the house that you have currently. And so it depends. But to answer the specific question about timing of listing a home for spring, Steve alluded to this, but I think there is some data behind this. Historically, the number of listings peak every year in June and July. So that's when everyone's coming on the market. They're coming on in May, June, July. But if we look at the amount of transactions that are currently contracts being written, pending sales, the peak is usually in March, April, May. And so what will happen is those March, April, May offers generally close in June and July. So everyone thinks that June and July is the peak selling season every year. The problem is they're already behind the curve. And what happens is that every year the price has about an 8% ebb and flow. The peak pricing for sellers every year generally is in March, April, May, and then the rest of the year is a little bit of a softening. And maybe it's not a softening on a house by house basis, but it's often that the best homes that everyone wanted sold, and that the secondary homes are having to do price reductions to get their homes sold later and later in the year because there's fewer and fewer buyers. So historically, we see sellers 2 to 3 months late on the market every year. While it's nice to list your house June 15th when the kids are out of school and things like that, often we've used up a third or a half of the buyers for the year, and that the buyers that are shopping in May, June, July, and August are looking at the most inventory. So we encourage our sellers to get on the market sooner than later. Steve, do you agree with that?
Yeah, absolutely. You want to stay ahead of that curve. And you alluded to it as well with buyers. When you talk about buyers and should they wait to buy, waiting for that quarter point potential mortgage rate drop, how does that impact how many people are fighting for a home, and how does that affect the eventual price of that house? And so generally speaking, the earlier the better to the market if there's the right house for you on the buy side, and on the list side, if you can be ahead of that curve where the activity is happening and not all of the new listings are happening, that's where you want to be.
Okay, and then I'm going to address 2 other quick questions that we've got. Thank you for sending those over. One, Denise, you were saying, hey, I'm in Southeast Bend. What do I talk about, or I'm concerned about the value of my home because of the affordable new homes that are coming on to the market in some of the new developments. Great question. There's no crystal ball on this one, but historically what we've seen is that a lot of the quote unquote affordable homes that are on the market, those buyers are not the same buyers that are buying market rate home. These are often deed restricted homes where they have to make a ratio 80% or less of the median wage in the city or the county, things like that. So it's not that they're a buyer for both homes. They're very much a buyer only for the affordable homes. So historically, when affordable or non-market rate homes come on the market, it generally doesn't affect the market rate homes, whether they're a mile away or they're 100 yards away. There's not a real strong direct correlation between the two. Increased inventory does always um, put more competition against the homes that are for sale. But historically, this maybe I can some historical perspective on this. Historically, we're producing a lot less homes than we were in the early aughts when we had more people moving here. So, in a context of the amount of homes that sell every year versus the amount of new homes that come to the market, the new home inventory, it doesn't, is only a small fraction of the amount of homes that are selling. So whether, 100 or 200 new homes come on the market in a specific area in a specific couple months, generally it's not having much of an effect on housing prices overall. And I know that's not a direct, but this is a strategy session where we would need to sit down and talk house by house, block by block, and we'd be happy to do that. Steve, do you want to take the one that Liz had regarding um, the perceived exodus from the COVID buyers?
Yeah, absolutely. I would actually say I don't see a lot of panic selling. Um, there are always one-off examples of someone who gets a little spooked or needs to move, getting pulled back to their job or something along those lines. But I just don't see it in the data. I don't see it in, what I see in the listings. We see some price reductions happening. I know we're going to talk about that shortly. But I don't see panic selling overall. But most of those sellers are buyers somewhere else, and for them to get out of their home and panic to get out of their home to go to a market where they might not be able to afford what they want or they've given up their low rate, we just don't see it.
Yeah,
So
and we didn't have much of a, they called it Zoom town where everyone was moving, buying sight unseen. When we looked at the data after the pandemic, we thought there was a lot of people moving here sight unseen, and there was a few stories, but there wasn't that much. And when we look at historical perspective, we had about the same amount or less people moving into Bend during those pandemic boom Zoom times. It was just that there were so few homes for sale because during the pandemic, no one wanted to sell. So there was no homes, there was no new construction happening. So all it took was a few new buyers coming to town to think that we were being overwhelmed with immigration. And it took Damon Rumberg, who's the state economist for Business Oregon, to grab me and be like, Brian, we didn't have a Zoom flood come to Bend. And he had to show me statistically. So we didn't have that many Zoom buyers that are being called back to be in office in San Francisco. We had a few of them, but a lot of those have just said, fine, I'm not going back. I love Bend too much. So we don't really see shadow inventory of Zoom buyers that are going back to wherever they came from. It's really just not that much of a factor here, mainly because we have such a diverse economy here in Bend. A lot of these Zoom towns that are now busting are lifestyle towns that have no economy. And people would go there. It was fun to work remotely. They get called back to office. They have to go because there's no other jobs. Bend's pretty different. We have one of the most robust economies in the Northwest. We have a more robust job creation economy than Portland. And the people that want to stay here are staying here. So we're not seeing much of that effect.
I, I love all the questions that we're getting. It's great. Terry's got a question in here about leaving home on the market and leaving it for sale during the winter and hope that a motivator buyer comes. Yeah, it's absolutely a strategy that can work. And days on market has increased across the board, locally, nationally. I'm not sure that an extra 30 or 60 days moves the needle and makes it so that your house has now this stigma. So if it works for you to have your home on the market and it's presented well and all of those things, there are buyers that are out there, and the exposure I think can be a good one. Again, all of these are a caveat that it's a deeper conversation, but
Yeah, I'm going to jump on that before we get off that. A lot of people say, I need to take the home off the market. I need to rest it. I need to reset days on market. And those are historically were a little bit important. I put less, the internet shows every time a home is on or off the market, all the big ones, Zillow, everyone tracks it anyways. There's no hiding price changes. There's no hiding price drops. The amount of sales in the winter are a lot less, but inventory is at 20% of what it is in the peak. And so we often encourage our sellers that have a home they're willing to show or that's vacant, to put your home on the market, because even though there's less buyers, there's a lot less to look at. And there are times we've had some of our biggest months. January, February last months were this year were our two biggest months of the year. And so we have these random winter cycles sometimes, and there's nothing available for sale. If your home stands apart, if you have a vacant home, if you're willing to put up with showings at times where other people are not willing to put up with showings, often you can sell when there's very little competition on the market. So it's a case by case basis. But we often encourage people to kind of fight through and keep it on the market if they're willing to do it, because everyone's, saying, hey, I want to get the kids out of school. I want to, I don't want to show it during the holidays, things like that. If you're able to be available for business at those times, it can be surprisingly productive for a seller. So, Steve, let's move on. Let's talk
Yeah,
about pricing, because a lot of people are talking about pricing. So I want to get to that right now. Let's talk
sure.
both nationwide and what's happening here in Bend.
Yeah. So this is a
Oh,
quick, yeah, this is what home sales are expected to do next year. This is part of the reason why we believe that next year we'll have activity. Part of it is the increased inventory. Part of it is, more favorable interest rates. And I would say the big part of it is people buy and sell homes for fundamental reasons, and they can only wait so long.
yeah,
So
nationwide, National Association of Realtors, Fannie Mae, all the big ones, they're predicting about a 10% increase in the amount of transactions in 26 over 25.
So I don't know if this chart makes, is what people expect of what the last 4 years look like. Prices have flattened. We still see our yearly seasonal trends. But if you look at where we are now versus where we were, it's very, very close to where we were in early 2022. So we're staring at 4 years of relatively stable prices. This chart is nationally, and our next chart is this very same trend that we've seen locally. And so right now the median sits just shy of 800,000, and that dotted line is where we are today. And you can see how often over the last 4 years we have crossed over that line. We've seen fluctuations of 5 and 10% on any given month just due to monthly activity with a small data set. But overall, after a run up that was pretty significant in the pandemic era, we did not see a big recoil. What we saw was a very flattened, stable, like you've heard in the news, soft landing, and that this chart sums it up. If anyone has looked through our state of the market, one of the things we pointed out in this is if you draw a trend line over those years leading up to the pandemic, just draw a straight line through that. Where we land today is pretty much where you would expect we would be if that trend line just continued the whole way through and we didn't have that big spike. So we're not sitting at levels that seem extremely inflated over what that trend had looked like for 8 years prior to this big run up. And so to me, that shows stability. Brian,
Yeah, and I mean, if like, everyone's worried about buying in a bubble, right? They don't want to overpay. But what Steve is saying is if you start back in 2010 and do a 15-year trend line, it's as if the pandemic boom had never happened. And this 4 year, almost 5 year now, right, Steve?
no, yeah,
Flattening had occurred. And
yeah.
so where we're at right now is we're in a situation that interest rates went from under 3% to 8%. That was over a doubling of our interest rates. Mortgage rates went through the roof. That should have caused a crash, right? If housing prices stayed stable through a 2.5 increase, a doubling of increase in mortgage rates, what that shows is there's resilience, there's a floor, there's a baked in demand for the housing stock that is in Bend, and it's giving buyers an extended window to re-enter the market. There's very few times in housing history where prices stay stable for 4 and 5 years, and they usually move in one direction or the other. What we're seeing nationwide is that unless interest rates go back up, if interest rates stay where they're at now or they soften even further, what I project is there's going to be a lot of buyers re-entering the market. And even with increased inventory, my guess is that curve is going to start to go up into the right a little bit in a more modest fashion in the year to come. Obviously, that's with the caveat based on because affordability is such a big issue is on where interest rates go. And that would involve a conversation talking about the Fed, that would be talking about stagflation, that would be talking about some bigger things. But kind of if we're only looking at the factors of the way we see them on the ground today, what this is showing is that we're in a stable scenario that actually works both for buyers and sellers. Steve, do you want to talk a little bit about how you would act as a buyer or a seller this year?
Yeah, so excuse me. So, the biggest thing that we have, we've brought it up a few times about supply and demand, and it's how many listings come on compared to how many buyers come in. And so, if you're a buyer, you're going to be looking at what are the options out there for me that make sense, that fit my lifestyle, that I can afford, and that is going to be when you are able to step into the market. What your affordability that like we talked about before. If your wages are going up, you can afford a little bit more. And so, you can get caught up in this where you go into a wormhole of analysis of it. At the end of the day, someone who's purchasing a home is doing it for a fundamental reason. And I would say that you be very uh, detailed in your research. You know what's happening in the market. You're watching the trends. You're listening to the analysis so that when the right house comes on, you know to act. And if you're that type of buyer that's just looking for a certain amount of a price reduction, you're going to miss out on things. There isn't a set amount that you can just look at and say, hey, I need to buy it 10% under market. A list
Yeah.
price is the price that a listing agent and or a seller think their house is worth or where it makes sense for them to sell. And there was a question in there about overpriced listings. For some sellers, it only makes sense to sell at a certain price. And so, if you're a buyer in this market, you have to have done your research. You have to have an advisor by your side helping you explore all of the options, know what kind of inventory might be on the horizon, and wait for that perfect timing to match.
Yeah, so we have a lot of people are saying, hey, I'm going to wait till prices go down 10% or whatnot. That may make sense for you. Let's look at the data. Right now, homes are selling at about 96% of the original list price, which means they come down about 4%. Steve, is that an accurate figure? And then the sale price to the final asking price of after any price drops is about 98, 98 and a half, which means that once a home comes on the original market, it's selling at about 4% off, usually has a percent or two of decrease, and then there's about another point and a half out there for negotiation. And that's what has occurred on the last couple thousand sales in Bend. But a fair amount of homes are having price reductions. And it mainly has to do with the fact that if we're looking at this chart, there's a lot of sellers that said, hey, I want to sell my house. It only takes one buyer. I'm not going to price my home at the same price it was at in 22, 23, 24. I'm going to add 5 or 10%. And those are the ones that are getting the big price reduction that are catching the attention of the newspapers. So if we look, Ben, Oregon leads the nation in the amount of listings that have had price reductions in October. That's not saying prices have coming down 27%. What that's showing is that about a quarter of the listings are having to do price adjustments to their list price to get their home sold. And so what this shows is some softening, but really it goes back to this, where a lot of the sellers have just extrapolated up to the right, saying, well, market housing prices have to go up every year, right? And they often have to go through a quarter, 2 quarters on market. And there's a lot of homes that are selling within days of hitting the market, but then there's some overpriced sellers that have to do corrections. It doesn't mean the house prices are going down. It means that the listing prices were incorrect.
Uh,
And then finally, this will be our final slide unless anyone has any further questions. Steve, let's talk about what the experts are talking about nationwide, where prices are going.
So looking at the chart over the last 4 years, listening to the data that we just went through, it's really not a surprise that they're looking at some more stable growth, moderate growth. Over the course of these eight or nine experts, we've got everything from a slight decrease to a 4% increase. And if you extrapolate this on a few more years, it's the range between the experts is anywhere from 6% to about 20% growth over the next 4 or 5 years. And so what they're seeing is the data leads. The data has shown that we are in a stable environment, and all of the
Mhm.
data looking forward and the expectations about where some of that is going is leading to more stability. It's not a big move up. It's not a big move down. People aren't buying because they think they're going to get pandemic era returns. people shouldn't be selling because they think the market's going to crash. Overall, as long as things continue to move forward in the directions that we're seeing, we're in a very stable environment.
Yeah, and stability is what I love because housing is generally the biggest investment, biggest asset in someone's life. And making a panicked decision based on what everyone else is doing because they're afraid they're going to get priced out or housing prices are going to crash is irresponsible and scary. And so to be in a situation where house prices are stable, that people can make an informed decision, where inventory is coming up so they can choose between the house they want, um, is a very, I love stability. I think that both buyers and sellers can be successful in this market if sellers are appropriately priced and that buyers are realistic about, the data on the ground. So I take a deep breath in this market and say, great, because I don't think your house should be a speculative investment. A house is where you lay your head, where you raise your family, where you become a part of your community. If we're talking about speculative real estate investments and multifamily housing and land and all those types of things, that's a whole different ball of wax. But when we talk about primary housing, whether it be a condo, a townhome, a ranch, or your single family home, I think this is one of the more reassuring, calm scenarios that we've seen in many, many years here in Bend. And I'm incredibly reassured. And this is where, as advisors, we can help people make good long-term decisions. And whether it's January or July of next year, there's going to be opportunity for both buyers and sellers.
I think that's a
Okay,
good.
Steve, 41 minutes. I think we addressed everyone's questions. The only one I didn't address is land available. There's not much land available. It's been pretty picked over. There are some micro opportunities to get involved. The city of Bend has lowered barriers to adding additional dwelling units, lowered parking restrictions, allowed the ratios of the lot coverage to go up. They want more housing in Bend. So there are some opportunities to kind of change and play with zoning on individual lots, but there's a fair amount of people out there after those. We could do a whole podcast just on that. But there is some opportunity, but all the big chunks within the urban growth boundary, they've been spoken for 10 years now. So anyways, thank you all for joining. If you have any follow-up questions, we're going to send you a copy of this webinar and please just reply to that. We'll be happy to help you at your convenience. Thank you, Steve.
Thanks, everybody.
Go home to your family, and I'm going to go take these dogs for a walk.
Bye, everyone.
Cheers.